I want to thank everybody for coming in. I can't exactly see how many people are. 59 people are in. Generally, what we do is we give it a couple minutes till after, like till 5 after, 12 or something like that. So we're right on time. I want to introduce Rob Booker. Rob's a very well-known trader, educator, and author, and he specializes, I think, in the FX world. I mean, although I'm pretty sure he probably follows other markets. As we're talking right now, the S&P has just rallied 20 handles and like, maybe 16 handles in about 4 or 5 minutes. One thing I do know about Rob is he's a well-liked guy. He's a family guy. He lives in Houston, Texas, the Longhorn State. Love that state down there. What we're going to do is we're going to let Rob take over, and then right after the webinar, I'm going to come back and ask Rob some questions, and we'll open it up to other people asking questions. I know that a lot of times people will try to ask questions during the webinar, but to tell you the truth, what that does is that just upsets the flow of the slides, and whoever is presenting, they're kind of, whatever they're thinking, they go off track and stuff. So what we want to do is get the most out of Rob's presentation. Like I said, very well-liked guy, very good reputation, and we're going to be sitting here listening to it, Rob, and good luck, and I'll talk to you after the webinar.
All right, thanks a million. Really appreciate it. All right, let's see here if I can present my slides here. All right, you should be able to see my screen and see the slides. So if you want to let me know that that's working out, somebody could let me know. That'd be great. Otherwise, I'll just assume I'll just assume that you can see everything that I'm doing here. So I just want to say I appreciate the invitation. So excited to be here. A lot of you don't know me. Be happy to get to know you better. I'm going to give a presentation from a set of slides on behalf of my friends at Noft. I do some work with them. They came to me and asked me if I would apply some of what I do using their indicators. I love what they do. I love the folks over there. But I've been a trader for about 18 years now. I was a CTA. We'll talk about that in a minute. And I just want to share some successful stories of trading and talk about how I spend less time in front of the screen. So if it's all right with you, I'll tell you a few stories about success in trading and then some of my failures as well. And then I'll share some simple charts. So if that's all right with you, we'll get going. And like I said, I'm excited to be here. I hope you are too. First problem that I encountered when I started trading was that trading was really difficult. I probably made it more complicated than it needed to be, but I certainly made it difficult, and I made it difficult for myself. And at least it was for me. Maybe some people out there think it's easy. I mean, I see pictures on Instagram all the time of some jackhole supposedly driving a Lamborghini around with, which of course is probably rented, and bragging about having made $12 trillion on, I don't know, stocks under 30 cents yesterday. And the reality is that as interesting as that story is, trading is a little bit more complicated than that, or at least we make it to be more complicated than that. And because the internet is just filled with jerks that have never traded in their lives and have no respect for how complicated it is at the beginning, and they aren't even really trading, the internet, then it just becomes a big story about the end result. Like, oh, look at me. I, live in this mansion in the Hollywood Hills and drive this Ferrari or whatever. And, trading is easy. And those people are just liars. And that's so frustrating. Not for me, but I don't care about these people. I mean, they're all going to, get what's coming to them in the end. But what I dislike about that is that it doesn't really get to the heart of the issue, that for someone that's been trading for a while or someone that's just started, trading is complicated, and the world is just filled with indicators. So anyway, the question I have for you is, and I'd love to see some answers, later on. How did you first get started or interested in trading? So I was in law school in the Bay Area in 1995. So I went to law school right out of college, and I started getting interested in trading because I didn't want to practice law. And so during law school, which we'll talk about in a minute, I used to go have brown bag lunches with hedge fund traders and people that the folks over at Bear Stearns, which we'll talk about in a minute. And I got really interested in the financial markets because I thought, well, that's just easier money than practicing law. And I'd love to hear your stories. Like, how did you first get started in trading, or what was the first thing that interested you? Was it like you wanted to get out of a job, or you wanted to, produce some side income? I mean, there's lots of really honorable reasons that people. Francisco. So I'd go down into San Francisco, and I would go upstairs into Bear Stearns, and where I knew some people, and I would walk the halls of the clearing division. So the correspondent clearing division at Bear Stearns would clear the trades for hedge fund managers. Here's Axe, here's Bobby Axelrod. And there were these guys that didn't look so different, even in 1995 and 96, didn't look really that different than Bobby Axelrod. Like, they had a super clean desk. Generally, they didn't even have a computer on their desk. And it was always super organized. What is this? Is this some kind of ancient torture device? I've never even noticed that on his desk. They were always dressed casually, and they had everything organized. And it was a huge, huge difference between these people and the people I was used to seeing at law school. So I got out of law school and I started trading in the year 2000. My business partner fled the country. Our business failed, and I had about $150,000 in debt. I thought, if this keeps up, I'm never gonna have a family. I want to punch this old business partner in the mouth. And what the crud am I going to do with this situation? I owed a ton of money, and I wanted to get out of my, my financial situation. So my plan was to get up and running as a trader, make some money, or a lot of money, pay off the debt, and then get my life in order. And I figured, that would take a year or so. And I was trading with the measly sum of a borrowed $2,500. And I thought, yeah, that'll work. Those were my expectations. And I didn't want to practice law. I wanted to try my hand at this. And I had avoided going into the financial industry, even though I had a chance to do it during and after law school. And I figured if I didn't do it then, I would never do it. So I found a photo from back in those days when I first got started, and I wanted to know if I could show it to you. So here it is. This is Rob circa 2001. Just a cool customer, just sitting around. I didn't smoke, but but other than that, I was just basically, monkeying around with my trading account. And you see, I don't have a great story about how I started trading, or that, I was some kind of natural and everything worked out okay. Not sure if you've ever felt like that, but I did a terrible job with my first trading account. I wasn't a floor trader. I didn't get an MBA in finance. I didn't work for a big trading desk at a big bank. I didn't trade with the big boys. I'd had an offer from Montgomery Securities that took Netscape public. They co-underwrote Netscape. I had an offer to go work for them, and I didn't do it. So I totally blew that opportunity and didn't take that chance. And so I didn't have any of these things.
Perfect. All right. Take over again.
Okay. So once again, I used to brown bag lunch at Bear Stearns during law school. I was super interested in the world of finance, but I wanted to complete law school because I didn't want to be a quitter. This is a picture of what a law school professor looks like. He's just sitting around thinking about things with a super messy office. And this is the difference between what a law school professor office looked like and what the hedge fund managers at Bear Stearns offices looked like. And there were like 25 small offices on this 39th floor at Bear Stearns, and they each had one or two usually guys in them, and they were trading a fund, and they were trading 100 million to 500 million each. Some of them were more than that, and they were all just doing it on their own with these super clean desks, and Bear Stearns took care of all the back office stuff. And I was like, wow, that looks like a way better situation. Not just the money, because law school professors were making bank. They were doing fine. But these guys were doing something in a much simpler, organized way, and they were just way more confident about what they did. So I got out of law school. I practiced law for a little while. I started a business with one of my old college roommates who, when the business started to go down the tubes, we were making like $70,000 a month, but we were spending like $85,000 a month because we were idiots. And that business failed, and my business partner fled the country. And while I wanted to punch him in the mouth, I didn't have any time to punch him in the mouth. I owed $150,000 to clients and in taxes because the business failed, but we still had made what looked like on paper to be a profit. And it was just a complete total bummer. And I needed to make some money. So my plan was to get up and running, as I mentioned, make a bunch of money as a trader, pay off the debt, and get my life in order. And I started my trading with $2,500 of borrowed money from my friend Matt Zagula. And like I said, I found a photo of what I looked like when I started trading all the way back then. That's me, back in the day, just monkeying around with the charts. Because you see, I don't have a story about how I started trading and everything turned out great from the very beginning. That's not the story. I lost my first account. It was a complete, it was a giant explosion. It was a total mess. I lost that money in 72 hours. I lost my account trading in the FX market in 72 hours. And I was following some jerks trade signals on some website. And I thought, yeah, that guy can't lose. He won 21 times in a row. And then the 22nd time, I followed him into a Japanese yen trade, and it was a complete loser. And I remember I was up $250. I was at $2,750 almost exactly. And I took that trade and I held on to it. And all I was left with was $250. So like I was in an ironic twist of fate. I was left with only the profit that I had made, and everything else was gone. And I wasn't a floor trader. I didn't get an MBA in finance. I had an offer from Montgomery Securities, but I didn't take it. I started a business with a friend of mine and did some law on the side. And so I didn't start with anything. I didn't start with any specialized knowledge. And I like to make the joke that I was a floor trader for a little while, laying on the floor with papers strewn around me, trying to get back up off the floor. This is what my charts looked like, super complicated. And so that was my beginning. My name is Rob Booker. It's nice to meet you. As I said, I've done a podcast for traders for many years now. We're in our and the episodes are in the 800s. I love what I do. I love to talk to traders. I also publish a YouTube video every day at 9 a.m. Central Time, even on the weekends usually as well, for strategies and comments and jokes. I went from blowing up my first trading account and making everything super complicated to being a CTA, commodities trading advisor. I had the small $8 million fund by the year 2010. And today I manage my own and some of my family's money, and I share stuff on the social medias. I generally do whatever I want. And I do publicly show and manage my money in front of other people. So on YouTube or wherever else on social media that you follow me, you'll see a lot of trading or account sharing or whatever else. And I try to be as transparent as possible in everything that I do. It's the way that I would have liked to have had it back in the day. I remember when I was first starting to trade, after I followed that jerk on some website that had 21 winners in a row, I followed some guy in Switzerland because a friend of mine had lent him $750,000. And this guy was getting like checks for $25,000 a month from this guy in Switzerland. Well, it turned out that guy in Switzerland was running like a Ponzi scheme, and he was a complete idiot as well. And so my first experiences were just following the biggest jerks. And I felt like all this trading stuff was so complicated, and it was so hard to know what to focus on and who to follow and what to do. And I spent thousands of dollars on books and courses and all kinds of stuff. And I love traders because all of us kind of start in that same way. We get interested in the markets because we read a book or see a news report or read an article or meet somebody or, like I said, see some Instagram picture of some dummy driving around in a Lamborghini, even though he's got an IQ of 7. And if he can do it, everyone can do it. And some complete joke. And we get interested in it just like everybody else does because we want to take care of our families and we want to have more time and we treat people well. And we just want to make a living, not sitting under the death fluorescent lights in some crummy office with some super creepy guy from human resources coming over and pulling up his pants in front of us and asking us if we have plans for lunch. Like, we don't want to live our lives that way. And so I love traders because we're all risk takers who got into this for honorable reasons, but had trouble, all of us, finding the right thing to follow and the right thing to do that made it less complicated. By the way, 2 books that have really been influential lately in my journey as a trader. I just thought I would share these because I read a lot of books and people ask me all the time. These 2 books, Jordan Peterson's 12 Rules for Life and Extreme Ownership by Jocko Willink. 2 books, I would suggest you get them. These are the real deal. These are great. There's some great stuff in each of those books. So thought I would just share that with you. All right, so back to our story. It was 2001, and I was in trouble. I lost my first trading account because I was an idiot and didn't have any money, and I had to borrow money again just to get by. And I just felt like I was at the lowest point in my life. There's me as a floor trader. That's what I wanted to share earlier. That's me as a floor trader laying on the floor. And I knew that if I was going to succeed, I needed a different plan, and I needed some kind of plan, period. And I needed to know how I was going to get from here to there, like a map. I needed to say, here's point A where I am, and here's point B where I want to go. And I need to know, what am I supposed to do first? And then what am I supposed to do second? And what am I supposed to do third? Like, I see all these stories about the end result. Like, I would see these guys in their hedge fund offices, or I would read articles about people that had made it, but I didn't really understand what the building blocks or the milestones along the way to get there were. So like a map or directions. So I called an old friend. This is who used to show me around Bear Stearns. His name was Ron Suber. And he was the director of correspondent clearing at Bear Stearns back in the day. And so I would go, and he was just like, took me under his wing, and he would talk to me about the markets, and he would encourage me not to get into the business. And he set up interviews at law firms that, even under the most extreme of circumstances, never would have hired me. And he told me a bunch of stuff that I want to share with you before we get into the charts. The first thing he said was simplify everything. Did you see how those offices looked when you used to visit Bear Stearns? You see how simple everything was. Do you see how uncomplicated everything was? And he would say, remember those 2 guys down the hall, blah, blah, blah. All they did was trade pharmaceutical stocks, and it's 100% of what they did. You see this guy, he's short only on volatility, and he only looks for trades that are short volatility. Or this guy only trades options on IBM, or just crazy focus. And he said, that's number 1. And he, and since then, if you look at the titans of investing, and the people, and these guys have had good years and bad years, of course, but if you look at the titans of investing, Bill Ackman, Carl Icahn, and you look at pictures, if you just Google pictures of them at their desks are not just horrendously filled up with garbage and stupid things. Generally, a lot of these guys don't even have a computer on their desk. They know what they're doing, and they know how they're doing it, and they have a plan, and they focus on it. Everybody uses the example of Warren Buffett, but it's a great example. He focused on insurance, basically. So Ron told me the next thing is just get a single-minded focus on one thing. Know what you're going to be great at and how you're going to evaluate an opportunity. Get a set of parameters or a routine in place for doing one thing and doing it well. And don't do all kinds of stuff and follow all kinds of different harebrained ideas, or follow a bunch, the latest newsletter of the month, or get a focus on one thing, one strategy, one method, one way you're going to evaluate the market. And since that time, one of the great examples of this idea or this concept is Michael Burry, and he was featured in the movie and the book, The Big Short. And Dr. Michael Burry was a doctor. I think he graduated from Stanford. He started trading when he was a resident at Stanford. And Michael Burry made a killing in the subprime mortgage crisis by focusing one thing. And even in the midst of a horrendous drawdown and enormous amounts of pressure, he stayed true to what he believed in, and he turned a gigantic profit and proved a lot of people wrong. And you might say, well, he got lucky, and for everyone, Michael Burry, there were lots of failures and people who blew up and blah, blah, blah. And that's true of everything. Yeah, sure, right, that's true. But by not focusing, you can guarantee that you're going to be a loser. And by focusing, like you all do here, you can be sure that things are going to turn out, or at least have a chance to turn out a lot better. And this advice that Ron gave me made all the difference. It made a huge difference in my life, and it set the tone for everything that I did. And even though it took me a few years to get it right, because I'm really good at complicating things, his advice about simplifying, focusing, that made a huge impact on me. And so if I could show you a way that I've simplified my analysis, in particular for swing trading and in particular for FX, excuse me, to find better trades in less time, my question to you is, would that be all right? So would that be all right if we did that? If so, I would love to show you a few things and, get down to business. All right, so I work together. So I do a bunch of robotic trading on my own, and I do discretionary trading as well. And for the discretionary trading that I do, so when I look at swing trades, I use these indicators built by my friends at Noft. And I started using these about 7-10 months ago. And they greatly simplified everything I did when I did my discretionary analysis. And I went to the guys and I said, this stuff is great. I'm going to mention this stuff on videos and when I do webinars. And I hope you don't mind this. Not only do we not mind that you do that, we will pay you to be an ambassador for us. So with full disclosure, to be completely transparent with you, Noft pays me to be an ambassador for them because I am thrilled with what they've done. And I do believe in it. And I do show and trade my live account with this kind of stuff. So they built a series of what they call, and I believe are institutional grade tools that simplify the analysis. And I want to show you exactly what these tools do. They keep everything clean and organized, kind of like a hedge fund manager's desk. So here's what we're going to see on the screen today. We're going to see a series of lines or blocks. And these lines or blocks represent zones where there are likely to be turnaround points in the market. And of course, they're not a guarantee. And anybody that tells you there's guarantees is a liar and a dummy. But these are great high probability zones where we have a good chance of being successful. And we can sit and wait for a trade to come to us instead of chasing after the market or getting interested whenever there is activity. So what I did was I opened up the old Ninja Trader and I pulled up the playback feature and I just played back one currency pair, the British pound. And I use this playback feature which I love because I can play back the candles in time with these zones popping up on the screen for me. And I can simulate what I would do and I can make decisions and I can sort of organize my thinking, refine my rules, and build a template for how I evaluate the market. So if that's all right, I'm going to show you a little bit more about how I use these zones. And they call them supply and demand levels. And we'll talk about that in a minute. And these are just simple blocks where price has gone to extremes where it has a historical likelihood of turning around. And I don't put anything else on the screen. So it's absolutely clear and simple. So you getting this? So if you're with me, we'll just look at some of these examples. So I just played this back this morning. I put this together today. And so when price hits one of these areas, so these are the supply levels where basically price has reached a historical or recent point where a reversal is likely. And I'll place my orders right in these zones. And I'm going to show you a bunch of examples. I'll just place my orders. And the charts are going to put this up here based on ping volume plus an equation that they put in. So it's just based on basically where there was lots of volume over time. So it's not something magical or scary or weird. But it's just basically high volume congestion areas where price reversed with volume in the past. And the middle of these areas is kind of like the sweet spot where I set my orders and I set up my trades. Without anything else there and without worrying about overbought and oversold or indicators or economic releases or all the other stuff that can complicate things. This is what I do, and this is how I identify things, and this is how I evaluate. I say, when we reach up into this zone or this zone, I need to start taking profits or set up sell trades. When we reach down into this zone, I need to start setting up buy trades or take profit on my shorts. And what I look for is the midpoint in each of these zones. Now, if there's a lot of volume over a wide period, the zone is wider. And if there's a little bit of volume crammed into a small area, there's a smaller block. So right here, for example, price falls to the midpoint of the buy zone, and this becomes a buy trade. And the green will turn a lighter shade, and that will say that this zone is activated. And you could see I got plenty of time in the course of an intraday trade. I have plenty of time to open up the trade, set the trade, and I'll place stops below the zone, and I'll place targets usually halfway the distance to the nearest zone above. And that's it. Then I walk away, and especially walk away. Walking away is like the most successful trading strategy of all time. And this real simple sort of congestion of volume where price was before, this sort of congestion area is where there's going to be demand. And calling it supply and demand is a great name. But what it really is meaning this is where volume has increased, volume has stacked up, and on the buy side. And this is where volume is stacking up on the sell side. So we get up into this sell zone, and I definitely want to be out of the final positions that I have, and I want to start setting up sell trades. So that's the sell zone when this happens. This zone is a lighter shade of red because it's been activated or price has touched this zone. And then I need to set up a trade, and I will generally target the halfway point to the zone below. And boom, these aren't going to be giant trades. If it's intraday, it might be a quick 30 pip winner in the FX market. So the FX market, for many of you, you already know this, is going to be all about pips. And in the British pound, you know, if it goes from 1.2980 to 1.2979, the difference between 80 and 79 is 1, and that's 1 pip. And that equals either $1 or $10, depending on the trade size that you trade. And you can even trade for 10 cents a pip if you want in the FX market. So this is just a quick 30 pip winner, which on a mini lot, which requires very little margin, that's $30. And on a standard lot, which once again requires very little margin, that's a $300 trade with a really quick movement, and it makes it easily down rapidly. And the profit target's going to be a little bit larger than the stop loss. And here's another example. It's not going to be, once again, it's not going to be the big short. You're not going to be featured on the front page of the Wall Street Journal for this, but you're going to feel pretty good about a predictable method that repeats itself over and over again, that just keeps happening over and over. I like to say that before we hit this zone, I can see the trade coming. So I can see it because this supply zone is up on the screen and price is reaching up toward it. I know that I want to put orders in up here. And so I can look at it at 8 a.m. in the morning and 4 p.m. in the afternoon, and that's all I'm going to do. I don't have to look at it again. I can just, once I know where those zones are, I can look at it a couple times a day and put some orders. You could do that. You could look at it twice a day for 5 or 10 minutes, and you know exactly where you want to have your buy orders down here and where you want to have your sell orders up here, or whatever other system you have. Let's say you trade with divergence, or you trade with economic reports or news or whatever. You know that you want to put your profit targets up here and make sure that you're out of those buy trades by the time you get up here. Or if you have sell trades open, when you get down here, you want to make sure that those trades are taking profit and that you're getting out. I know that when price gets up into this area, I want to start building a sell position. I might sell here once with a very small trade, sell again here with a larger trade. And if price starts to reverse, I might start adding to my winning position and try to stack it on. So imagine that. Imagine, looking at the market in the morning, setting some orders in the areas where you want to set the orders. And then imagine that price turns around and you check it later in the day, and price is moving in the direction you want it to go. And so you set some orders to capitalize on the movement that's going in your favor. So once again, that's the sell zone we just looked at. It was activated, so it turned off. And that sell zone led to a little bit of a move higher and then a really nice reversal. And that was like within, a 24-hour period. That's a $60 trade with a mini lot, which once again, a mini lot's going to require, $500 in margin or so, depending on what kind of a margin level you're working with, or less. Or a $600 trade if you're trading with a standard lot, which is going to require a $2,000 margin. So not a huge amount of margin put up in exchange for a pretty nice return. And that's just one currency pair, one time frame chart, looking one time every day. That's all that is. That's just one currency pair on one time frame chart, looking once per day. And if you want to look at the Japanese yen, great. You want to look at the British pound, great. You want to look at whatever. I mean, I look at, I cycle through 20 pairs at 8 a.m. and 20 pairs at 4 p.m. So here's that, the old marketing question. So how would your life change? How would your life change if you stopped listening to this webinar right now? No, just kidding. How would your trading change if your trading was simpler and way more consistent? That's the question I'm always asking myself. I'm asking myself that question. Like, how can I simplify things so that I'm not frantically scanning for stuff? So what I want to do right now, on behalf of my friends, is show you a way that you can get this stuff on your charts and look at it together with me. And if that's something you'd like to do, then I want to share just a couple of things with you with your permission. And if you're not interested in that, you can just turn off the audio for a minute or whatever, and I'll cycle through those slides. And I know some of you don't want any of these tools and may not be interested. And then for some of you that are serious about this kind of stuff and want to simplify things, this might be something that will work for you. And so with your permission, I just want to spend a minute and share with you what we've got. So I put together with my friends at Noft, naked pairs, like no indicators, just the zones, a training course. And that's typically, I think it's actually more than that, but that's typically $200. And then an installation of the software on a webinar together with a consultant. And then the tools, not just the supply and demand tool that I just showed you, but the true value analytic tool, which generally sells on their website for $2,000, and people gladly pay that money. All of those things I've got. And so what they did was they put this stuff on sale for this webinar today. And you basically get the class, so the instructions on how to set everything up. And then you get the installation and the tools for free. So, but I wanted to know if I added something to all of this, if that would be okay. Because I thought, well, that's, everybody's got a tool and a class. Everybody's got that. What's the big deal? So first of all, I asked them if they would guarantee it, meaning if you bought this and you didn't like it, you could just write them and say, I don't like it, I want my money back. And then they would treat you the way that they would want to be treated. It's like the golden rule of trading. So they completely guarantee this. So if you load it on your charts and you don't want it, they have a guarantee, which is kind of unheard of in this business. And then the second thing that I want to add to this is something that I think makes this all the more interesting for those of you that want to try it out. And that is, I've got a top secret Dropbox folder. So this is my top secret Dropbox folder, is where I post videos 2 to 3 times a week, just for the guys just for the management at Noft. And I put my videos in there and I show them my setups. It's one of the reasons they pay me. And then they share those setups with their subscribers. And I thought, well, what if I just shared those setups with you at the same time I shared it with the management? What if I just showed you, here are the 2 trades setting up right now, and here's a video of me putting those trades into my account. So you can see my account balance, my stop, my target. And if you could see those, then we could just simplify the process of using these indicators. So I thought I'd just throw that in, and once you sign up, you let them know that you signed up, and then I'll share my Dropbox folder with you. And every time I drop a new folder in it, you're just going to get a notification on your phone and on your desktop computer that a new file has been added, and then you could just watch the video. And, it's like 2 or 3 minutes long, and then you get the setups. So by now, I love these indicators because they simplify my analysis. So I'd love to send you that analysis every time that I do it and show you the trades that I'm taking. So you can save even more time, and you don't have to go searching for the best trades or know exactly how it is that you're supposed to apply the indicator. So here's where you go next. And then I want to save some time for questions, which I'm super excited about doing. This is where you go. So if you go to this link right now, I'll scroll here to the bottom so I can draw on the screen. If you go to this link, this will be available today. And it's a whole bunch of tools for your charts, plus the class, plus the setup, plus the Dropbox, the secret folder. And it really is secret. Like I really do just share that with the management, and then they send out those trades. And I might as well just send them to you. And those are the trades they send out to the people who paid $2,000. And I did not ask them permission, but I don't care. I'm sure they'll be okay with it. They're good guys. So you can get all of that. It's about $2,000 worth of tools and stuff for $49 if you go to that link today, which I hope you do. And now what I'd love to do, I think Danny wanted to talk a little bit about crypto or take some questions, and I'd be thrilled to answer questions. I'd be happy to do that. So if anybody wants to come back on and we want to do some question and answer time, I'd be happy to do it.
Yeah. Hey, Rob. Thanks a lot. Great presentation too.
Yeah, you bet.
I've got a little background noise here. I didn't know the cleaning ladies were coming today. So between the dog and the vacuums, I got my hands full. But anyways, real quick, I just wanted to ask you, you've been a currency trader for the entire time that I've known you. What about cryptocurrencies? What's your view on cryptocurrencies? Where do you think it's going? Is it viable for investors to get involved in? What are you thinking on that note?
Yeah. So, all right. I was just looking at this today, actually. So let me see if I can pull up. I was just looking at this stuff. So I got a bunch of answers to your question, and I'll go through them as quickly as I can, and then we can. So the buy and hold for me strategy, I'm 0% interested in buy and hold. I think that can lead to some disastrous consequences that are not unlike buying and holding overvalued real estate or buying and holding pets.com in 2000 or 2001. But as far as day trading or swing trading, I got to say, I don't know how much, now I'm going to be embarrassed by my ignorance, but I don't know how much bond trading anybody here does. But one of the reasons I like looking at bonds is because they're like technically obedient. Like if you draw a level on a bond, it's going to hit that level and it's going to be technically obedient, and it's going to sort of behave and bounce off of levels and respect levels. And that is so true of the cryptos, whether it's Bitcoin or Ethereum or whatever. So like I do this I do this like 4 times a week. I'll jump in and identify a level of divergence or levels on the charts, like we talked about today, and I will trade off of those levels right off the chart. And so for that purpose, I just think it's maybe one of the greatest trading instruments ever, because you could trade in super small quantities and super small amounts. You can trade with no commissions on like Robinhood, for example. So yeah, I love it. As far as day trading is concerned, I just love it for that purpose. Takes a minute for all this stuff to load. I have to drop some of these in the old private Dropbox later, but while this pops up. Yeah, it's just taking a long time to load. Any other questions, comments, jokes?
Yeah, well, anyways, really good job, Rob. I'm sorry, I've been trading the NASDAQ futures in the last couple of minutes. My head's a little spun around.
How's that going today?
So one last question. As far as Bitcoin goes, where do you see Bitcoin going over the next, say, couple of months, going into the end of the year?
Yeah, okay. Well, I mean, I'm happy to speculate anytime. the momentum is down. So it's clearly down, and there's a sort of a maybe today there's a risk on type of environment. I'm guessing that the NASDAQ futures are up. I don't know that, but that would be my wild guess. But as far as crypto is concerned, it's kind of a risk off situation right now. So there are levels down in the like the 3K, 3,000 level. These are levels where I get like intensely, super giantly interested. And by levels, I mean demand areas that we talked about earlier. And I'll post some charts with the zones on there a little bit later. But those levels are really good. So that's where I want things to go. And if there's any chance that I have for trading it longer term or staying in a trade a little bit longer or buying and holding on to something, that's the level that I need to see. And I would not be surprised if we got to see it. I would not be surprised at all.
Wow. And you think maybe before year end?
Yeah, easily before the year end. In particular before the year end, because, you know, family gets together and, you know, dad says to his 25-year-old son, thanks for, you're getting nothing for Christmas because last Christmas you told me to buy Bitcoin. So you're getting nothing. And, you know, people are going to maybe jump out of trades or whatever. But that's the panic, you know, that's the panic that I like to take advantage of is when everybody gets out. I mean, it's here to stay. It's 100% here to stay. And people aren't going to stop mining it, and people aren't going to stop using it. And there isn't going to be a long-term removal of demand for it. In the same way that just because internet stocks dropped in the early 2000s doesn't mean that internet companies weren't going to thrive and exist. And I think that's very similar of crypto, that, you know, tons of these on the list of cryptos, yeah, tons of those are going to go away. But the general, like, crypto is here to stay, and it's going to be here forever, and it's not going away. And so I love the idea of a giant sell-off from unsophisticated people who panic when things go wrong. Like, I love that idea because I don't have anything on right now. I can wait for it to drop, and I can wait for it to get to a really good price.
Yeah, and then if you're trading cryptocurrencies, where's the best place to trade it? Do you think it's the CME because it's regulated?
No, I don't think there's a lot of volume still on the CME, but I trade until recently. I traded on margin at Poloniex, and then I have accounts everywhere. I have accounts like every exchange you can possibly imagine that's in the US. But I do all of the buying that I do on the Robinhood app on my phone because there's no commissions, and that's where I actually trade stocks and options is on the Robinhood app. And so I do it right there. They have a crypto thing, and they have, I think it's up to 8 or 9 of them right on there. So I just trade it right from there.
And you're not worried about waking up one morning and having your money gone, are you?
You know, like because the exchange went out of business?
Yeah.
Yeah, I mean, on some of the other, like, okay, so like not on Robinhood, not at all, like never. That never is a concern at all. When I first got started day trading some of this stuff on some of the brand new exchanges, and there would be like outages and all kinds of craziness, I think there's a lot of reason to wonder, are some of these exchanges with names I've never heard of in the United States, are these really for real? And the answer is probably not long term. So that's why I like trading, you know, with Robinhood as opposed to anywhere else right now.
Yeah. Okay. Well, I appreciate your heads up on that.
Yeah, you bet.
I know that there have been a lot of people that have made a lot of money, but you don't hear about very many people making much money on trading cryptos recently.
No, you don't. And I think that's why, in my opinion anyway, that you don't hear about millionaires being made from people like, let's say, that are doing long-term trading, like super long-term trading on IBM or whatever. You don't, like, that's not, but there are plenty of people out there trading options and sure, on major stocks like that are doing trading, that are doing fine. And I think that's where this market is going, that it's going to become a trader's market as opposed to just sort of this speculative investment kind of, buy and pray and hope kind of thing.
Yeah. All right. Well, thank you very much for coming in today, Rob.
It's my pleasure. I'm so sorry that my slides didn't forward at the beginning. I'm sure that was my fault, and I really apologize for that, everyone. And I hope you had a good time, and I look forward to hearing from you, anytime. Thanks for having me.
Thank you, Rob.
Thank you. Hey, Rob, before you go, can I
Yeah.
ask you one question? There's been like 3 or 4 people asking about these indicators on futures and ES. Do they work at all in that realm?
Absolutely. Yeah. In fact, they have a whole set of the same exact indicators for futures. So, so absolutely. So if you're a futures trader and you want to use those indicators, if you get the package that we talked about today, I'll make sure that the folks over at Noft know that they need to turn on the futures trading for you as well. And I'll make sure they know that. So because they are separate, but I'll make sure that they know that if you want to apply it to futures and chart the futures, they'll turn on that feature for you.
Perfect. And then I have another question here. I wanted to know where your website is.
Oh, okay. Yeah. So I'm at robbooker.com, and on all of the, like YouTube in particular, if you just go to youtube.com/robbooker, you'll find me. And you'll find everything I do. Like I said, most of what I do is I just put it out there and I show what I'm doing. And then occasionally I do, I do like today. I mean, I do sell inexpensive things from time to time.
Perfect. I'm just kind of reading through the John's posting some. So John's posted those guys in the chat, those links there for you, and the offer link. And I think we pretty much have gone through all of the questions here.
Great.
So 3, 2, 1. Okay, that's it.
All right.
Thanks, Rob. Good job.
Hey, really appreciate it. So I can record something for you and send it over, or you could maybe, if you want to, you can just start the recording from the moment where we got the slides moving correctly again.
Yeah, I think John will have John edit up that beginning.
Okay.
We'll put it up on YouTube. I'll send you the link when it's up.
All right, that sounds great. Thanks so much.
Thank you, guys. Thank you all.
See you later.